Hi there, traders, and welcome to Trade the Structure and the Morning Jumpstart. We're going to take a look at the US markets, European markets, and anything that we can potentially trade today. Just go through some key levels where we expect the action to play out. So, US bounced right from the open last night. So, those algos were out to play, pushing their market higher. It was really just a short squeeze ahead of the FOMC meeting where they're expected to raise interest rates. Now, it may be that they're just settling in for an easier Fed, so their Fed are not going to be too aggressive with interest rates. They really don't want to. They don't want to cause any havoc into the share market, but it seems like you just hope that they're not behind the curve, which they have been in the past, where they just leave it a bit too long and they got a bigger problem than what they would expect or what they're hoping for. So it looks like potentially people are just repositioning. You've probably got any shorts because the market's been quite bearish. Any shorts just squeezed out of the action ahead of the FOMC. In case it is quite an easy Fed, they may even talk up not many interest rates rises down the track. So it's going to be interesting to see what that statement says. Now we'll look at the Aussie market. So remember, if you're trading the SPY 200, I think that goes off tomorrow. So it changes contracts from March to June. And I think that's tomorrow, the third Thursday in each trading month. So yeah, just keep an eye on that. There'll probably be a delayed open tomorrow. And today was sort of the last day. So it could be a bit of argy-bargy into that contract. So we'll just look at the ASX now. We've got, that was the action from yesterday. It was pretty choppy. You know, it didn't really go too far. It was really choppy. Coming into a potentially expected negative European session, which it was. The European market gapped down and then basically bounced from there. And then they flowed on to the US positivity. So ASX and the SPY flushed down to a support zone. You got this 70.40, and then basically from there it was straight up into the close where it did stall at 71.48. But I'm expecting the ASX to open up relatively bullish. Retail opens, pros close. It could be the fact that we just get this bit of a ramp up in the open, a bit of enthusiasm because the market has been quite negative, and just see if we can hold. I'd rather see this hold a higher low than just a straight move up, which it's prone to do. So if it's a straight move up, then we've got no long entry intraday, and then we're just looking to see what happens around this either 71.48. See if it does pop up there and flush it. Something like this, we get a shoulder or a lower high to work into. Come straight up to 71.72, see if it fades, see if we get a shoulder or a lower high to sell into. But otherwise, I'm looking for some sort of pullback and a higher low to buy into. If it does start to get something like this a bit heavy and we don't flush that on the open at 71.48, then you're looking for a short. All right, let's go over to the Asian markets now. The Hang Seng has been beaten down the last few sessions. I think the index was down over 1,000 points. The underlying index down over 1,000 points yesterday. They've obviously got their own COVID issues. There's a few more issues there that I guess the market feels that it could get exaggerated. It could blow out of proportion again. But it seems to be that the Hang Seng is the only market that thinks that. Okay, the Nikkei yesterday was actually up slightly. It wasn't doing too much, but it wasn't reacting to the downside the same way the Hang Seng was. So it's interesting. I think they were just trying to ramp it down into that major support level. We've got a major daily zone around the 18,780 to 18,365, and they just flushed through that lower end of it, which is really a low on a daily basis from a previous low. I'm not sure what date it was, but you can see the market spent its time sort of on the open, got sold off into the zone, bounced straight back. So you got that initial buying into that, and then ramped straight back down again through basically, through the end of the Asian market session into the start of or the mid of the European session before it started to find some buyers. Okay, and that was, you can see that was late in the European session, about 10 o'clock. So it did flush out some daily lows, took out some stops, maybe trapping some shorts before it had a big bounce, just squeezing back out. So it'd be interesting to see whether we do hold up again. So you got sort of two levels, 19,045. I would expect any continuation, we're going to break up and through that level. If we can find some more buyers and have a deeper pullback of this move down, I mean, there's a lot of shorts stacked up that could easily get squeezed out in the move up. Or are we going to sort of hold in here and start to break down? Okay, excuse me, start to break down through 18,720 and start to push back down a bit deeper into that zone there. Into the Nikkei. Now the Nikkei just basically went straight up. We had a big flush, and really that was a key level. You got a key level at 25,205. The algos wanted a bit lower than that. They wanted this level here, which was probably somewhere around 25,127. So it flushed that level, and then basically it was all one-way action up, and that was around 8 o'clock in the European session. So it spent a lot of time pressuring the market down, was looking bearish there, but like I said, it was holding up a lot better than the Hang Seng. before we got this bounce. We got some higher lows, you know, worked its way all the way back up to that 25,685 zone. Now, for me, I think the market's extended. I would not buy up here, and that's just me. I wouldn't be following the trend when you're into a key level that's just failed many times before. So I'd be ideally looking for maybe a flush up. I want to see some buyers trapped. It could be a really good spike up, and then I want to pull back in some lower highs to sell into. Okay, so don't forget the Asian markets will be looking at. You got FOMC tonight. We don't know what's going to happen. We don't know how they're going to react. To be honest, it's been so choppy. You know, one day it's up 500 points, the next day it's down, you know, 500 points. So it is a whipsaw at the moment, and that could be a sign of you know, the broader market just easing out of positions. You know, the algos would be working it up. They can sell into that. They work it down. They try to, you know, buy it back up again. So they're just playing around with it at the moment, is what I feel. And then so you've got the broader market. I think longer term may find some selling because of the interest rate rising cycle. So it's probably just like I said yesterday. It's the start of that that coming interest rate rising cycle. It's just how aggressive the Fed are going to be now. Okay, are they going to be more aggressive to try and get inflation under control, or are they going to just let it run harder for longer? Okay, which is pretty much my expectations at the moment. Even if it is a bit of a lack of a bit of a term of stuff up from the Fed, they do that time and time again. They've done that previously in the past with inflation. So we'll see how they go. So with regards to the Nikkei, expecting that to flush lower high. Now, if it does get a bit of a pullback, I'll be looking for something like this, maybe some high low and a bit of a squeeze, you know, good squeeze higher. Now the Dow, like I said, you know, same as Nikkei, flushed a low. That was into the start of the European session when the European markets gapped down. Now, you know, if you don't believe in algo moves, that's, you know, it's a prime example. They flushed through the lows, took out this low, trapped a lot of shorts. So that's all that was doing. It was really just trying to trap some shorts before they can ramp it back up again. You can trap enough shorts, you can get a good move on the upside, you know, going. Okay, so for me, we are extended. I'm looking at the MACD. It is extended to the buy side. Extended. It's been all one-way action up from basically that low 32,840 up to 33,645. It hasn't really flushed that level. Hasn't really flushed the highs. Whether we're going to react down off that level, find a bit of a base, come into the start of the US session, then ramp up again. They might want to be ramping it a bit higher up into the FOMC, which is about 5 a.m. Sydney time, thereabouts. You have to check that, but it's later in the US session, so it could be a bit of a case, you know, have a bit of a pullback, find another base and ramp it higher before, you know, we get this bit of a sell-off. If I'm going to sell earlier, I want to see it pop up and then the lower high back below that level. Okay, but we'll see how that plays out. Either way, it's extended for me, so I don't really just be buying it here because if you're buying, say, right where it is, 33,478, your stop has got to be 237. It's a couple hundred point stop. That's not the way I trade things. Okay, don't forget we're on a 30-minute chart here. US tech, you can see it's obviously failed off that 13,847. We've got a big move down to that support zone at 12,965. Now it did react higher, like we're expecting. So we're talking about this yesterday. We thought if it breaks down to the lower end, you've got, I mean, it did pop up, flush, and then ramp down again. And that was into the start of the European session where it started to rally higher. But that was just a flush. Okay, so the markets want to do that. If you're near a key level, you can odds on that it's going to flush the level, okay, before a ramp. If you're expecting it to bounce off this level and you're trading it somewhere around here, just be wary that if you're going to go long, don't go long just yet. You know that, I mean, there's a good chance that there's going to be a flush at the level. They want to take out some stops. They want to trap sellers, okay? You can trap the retail sellers into that level, looking for that breakout, looking for a continuation lower, and then ramp and squeeze them, okay, and a bigger move up. So here, now we've just, you know, flushed through that 13,410 level into the close of the US session. It's whether or not we start to back off. You know, we get something like this where we can work some shorts. Maybe that's going to happen into the start of the US session, or maybe, you know, it could be a bit of a pullback and keep grinding high into this, you know, basically into FOMC, see if they keep pushing it higher. But I would suggest that once you've got, you know, after a 500 or 600 point move on the Dow, a big move up overnight, that you're probably going to get some chop. Yeah, I don't think the market's going to want to start to buy it and ramp it too much higher because it's going to squeeze higher. They're going to get some profit taking coming to the start of, you know, coming to FOMC anyway, and from the start of the US session. Germany and European markets now, they were going down, turn around, straight back up again. So it is a bit of a choppy market. You can see that was about 8 o'clock. So you had the market open for an hour. You can see that was a move down from 7 o'clock straight down. So that's when the index opens at 7. Well, it was open at 7 o'clock, European Sydney time, sorry. Futures open at 6. So once the index opened, it was down, got supported, and straight back up again to squeeze all those sellers out earlier and squeeze out some sellers from earlier than that, previous session as well. So what I've been looking for, I'm looking for this level to hold 14,060 again. Okay, I don't see why you get them raising the interest rates and then ramp straight up. What it's got to do, it's going to be, I mean, the actual index will be closed by then. By the time they come out with FOMC, European markets are closed. It's just the futures markets that open and the CFDs open. So I wouldn't expect too much to happen prior to that, because it's got to do with the statement. If the US Fed come out and say we're going to probably ramp it up a bit with regards to interest rate rises, then I would expect these markets to fall. But if they're a little bit more accommodative, which there's a good chance no one wants to pull the trigger too much on rate rises, then I'd expect this just to chop around and probably hold between those two zones. But I don't expect it to really ramp up and through. Okay. But stranger things have happened. Really, it is a key level on the DAX. You can see it's touched it a few times. We spoke about this yesterday, so maybe flush into it and then look for a lower high. Just depends on the timing of when it actually happens. UK now find some support at 70.60. You've got that opening drive down when it opened and straight back up again. So you've got this zone here at 70.60. Then you've got this inside little level at 72.16. Major level through 72.50, which you could easily spike through this area into that level before it fades. But I do expect it to be contained. This action has been pretty much sideways since we got this bounce off this level, which is not a good sign for bulls, but it's also not a bad sign because it hasn't really broken through any key levels on the downside. Okay, so we could expect some range action. I would expect some range action into FOMC. I wouldn't expect the European markets to get out of hand on the upside too much, because we've got FOMC rate rises, and rate rises generally, it limits the cash flow around the economy, okay, because people are paying off more debts, everything's higher, credit cards, mortgages, any form of interest rate goes up, okay, banks are going to take advantage of it and ramp it up, okay, so you would expect there's less money flow sloshing around the economy to keep driving things higher. Aussie, so the US dollar pushed up, which is it's probably driving the Aussie down, but the Aussie's been quite, it's got more to do with commodities than anything else. It's not reacting as much to the US dollar, which US dollar is pressuring higher. Then it has pushed this Aussie down lower. Now this is that extension level we were talking about to hold up yesterday, and this is that zone. Okay, I expected it to flush deeper into 71.80, which it did, and bounce straight back. It's whether it can hold it this time round. Okay, we might get a little flush into that zone again. Something like this, but I don't expect the market to ramp up or down well ahead of FOMC. It's going to be choppy, so there's going to be traps. So if you want to go short, be wary that you don't get trapped into a short and it's just a squeeze back up again. Okay, and the same on the upside. Don't get long too much. Be nimble if you want to get long, because the market, especially ahead of FOMC, the market's going to chop around because the US dollar is just going to sort of hold a range. It's going to trap some traders. And that, which means that the currencies, the Aussie, the pound, the euro, are going to trap traders ahead of that number. Okay, so I'm still expecting really this level to hold 71.80, because I think the US dollar has well and truly factored into the upside, and we could bit of a pop on the number and then a drop. Okay, which means that the Aussie is probably going to bounce, and I would expect it, like I said, to hold 71.80. Now the euro, much the same. You've got a level in here at 108, 109.35. I would expect that level to hold. Now it could flush down easily. Could flush down a European session. US dollar doesn't need too much US dollar movement, but if US dollar keeps popping high, pressuring higher, this could just trade through, take out some stops, and extend that move down to 109.03. Okay, so it is a big drop, and that's why you're sort of looking at this level more to get flushed, but hold, flushed, but hold. Okay, and it may just grind its way back up, because as any shorts in here, whether you'd like to be, if you've got some good buffer zone, that's fine. But if you're short through this break here, they'll be the first ones that come under fire. You don't really want to hold a short position going to FOMC, especially, I mean, retail, it sounds bad, but retail may do, because their expectation is a stronger US dollar. Now, the US dollar has been strong. It factors in ahead of time. So you're not looking at what will happen. Rate rises mean a stronger US dollar. Now, that's already been factored in, because there's been talk of rate rises for months and months and months. So the US dollar is sort of factoring in. Maybe it's a parity, maybe it's where it should be, maybe it's at equilibrium, maybe it wants to spike higher again. It depends on what that statement is from the Fed Reserve. So really, I don't expect the US dollar to get out of hand on the upside, because I think a lot of it's already been factored in. Okay, they're just trying to whip out buyers and sellers on that number, chop around. So it's probably what happens 5, 10, 15, half an hour after the number, which is more important. Now the pound is potentially just building this base. You can see these lows. We've got a low in here before we got to ramp up. Took out there, come straight back down. Took out this low, didn't go anywhere. Ramped back up again, higher low, deeper pullback. Through this high. So for me, it's looking like it's wanting to build a bit of a base through here. It's whether or not we can get up through 30.88. That's holding the action down at the moment. You can see 1, 2, even that held a bit of a spike in that level before we sold off. So there is sellers lingering around there, holding the level down at the moment, or holding the price action down at the moment. It's just whether or not that's enough. We can start to ramp up. Now that would work well into a weakness into the US dollar after the fact. Okay, so if that's the case, expect this pound just to drive higher through 30.88, potentially get a bit higher. Currencies didn't do it a lot last night. They were more choppy, whippy. It's just setups, traps and stuff being set at the moment. US yen, now that came down, found a bit of some buying at 117.80, straight back up again. All right. No real safe haven into the, once I guess that's probably around the start of the US session. It was around the start of the US session. Once there was US index rallying straight from the open, safe haven disappeared. So any sort of safe haven buyers into the yen disappeared. So it's selling into yen, which actually buoys the currency, even if the US dollar does nothing. But the US dollar is actually edging higher. So that's still finding that same scenario, which has been the case for this move up. Same scenario, US dollar buying, safe haven just sort of relaxing, and it's been driving prices higher. But we still got this level at 118.55 to contend with at the moment. So I don't really know what I could expect from that. It's a bit of a each way bet. Now, if the markets sink into FOMC, it was up last night. If it sinks into FOMC, you're going to get safe haven bid into that. So it could be a bit of US dollar buying, but more safe haven buying into the yen, and the market rolls over back down through 117.80. But we'll have to wait and see. Gold's not performing too well for the bulls. We've had these daily highs, which it flushed up into lower highs. So since then, like I said yesterday, it's been just a steady move down. It's even accelerating a little bit. So whether basically I'm looking at the two scenarios, whether it can pop up and chop around this 1930 before holding a higher low and squeeze out some of these sellers, or whether we just continue and extend that losses into 1886. Okay, because that's kind of the next level you have got levels through here, which it could hold, and that's 1916. So whether that's flush to the level, we're starting to hold that now, and in that case you're going to sort of start attacking 1930, or whether we just keep driving down, and there's not really that much concern for that level there at 1916. All right, and I expect the way it's going, it's getting more and more heavy. Okay, so the buyers have got to really stand their ground first, and you're going to see that play out with regards to higher lows. Otherwise, drive into that 1886 area. Crude oil continues to pressure down, and that's probably taken a bit of pressure off the interest rate rises. Now, US had inventory data out last night, come out better than expected, which you would expect. And rising prices, two things: they're going to produce more for a better price, and the US market or the US government wants high. They want to ease pressure on raising inflationary pressures, which means letting go of some more crude reserves potentially. So I expect that's sort of been the case. More inventory coming out, more supply to the market in a time when the oil has been sort of pressuring down. Right, so it's been really hurting a lot of people. These higher prices, a lot of farmers, just people in general, and coming to Easter year, I'll be paying $2 a barrel in Australia. Still haven't filled up my car yet. Been holding off that, so I'm hoping that when I do go and fill it up, they've actually had the decency to lower those prices a bit, rather than leave them hanging around that 95 to $2 level, $1.95 to $2. So oil, it's whether or not we're going to hold off this 93.87 zone and we start chopping around, and we might flush into it. I sort of expect it to flush down to 91.46 because I just think it's too prime an area not to start attacking on the stops. Flush into that level, even flush in that zone at 91.46, because it's going to want to attack those stops. The market's momentum's down. It may look, I don't think it's going to be buoyant there. Like I said, I just think it's going to be flushed down. The market wants to start attacking stops, trap traders, potentially trap some shorts, squeeze out more longs, put more pressure on the long side before it starts to build a bit of a base, potentially start to build a base around this zone here, 91.50 to 93.50 sort of area. But we'll wait and see. It'll be interesting to see how that market reacts to interest rate rises as well. I don't think it's worried too much about them. But you know, oil is oil. It can be manipulated. You know, you get OPEC can turn around and turn off the tap a bit just to keep those prices buoyed a bit. We'll wait and see. Copper still under pressure. You know, we're speaking about this yesterday. It was under pressure once it got through this 148 zone. It's been under pressure since. It's holding a double top here, a little minor double top, which pressured the market lower into that 98.20 area. But you know, it did bounce off that level, but it's whether or not we can extend. And I think this is prime, just like I was saying with oil. It's primed to, it didn't, with this little move down, it didn't take out many of these stops through here. And it's primed to flush that area. Now, if it flushes that area, you know, if you think that's going to happen, you want to be short now. You don't want to be short into the level because it could turn around and just ramp straight back up again. All right. So what I'd be looking for is more flush into the area, see if we can pull back. Okay. And if it does this kind of thing, we get a higher low holding, then we'd be looking for some sort of base building action and see if we can ramp straight back up again. But it has to take out a key area in this respect. If that's going to go into that, I would look at it as this zone. You know, or you've got, at the moment, you've got this area here at 99.70, which is holding the market down. Now this looks like it could hold it down. It's confirmed once it gets into these lows. If that's the case, it gets into those lows and you get this kind of action, that's the anchor that you want to break, the anchor to the downtrend that you need to be broken. So just to start bringing in more buyers and ramp it back up again. But for now, that trend is down. Bitcoin really didn't do too much. It was around here when we were speaking yesterday, ramped up, straight back down, and we're straight back up again. So we're back up in roughly that same zone just after the open by the time this the morning report got out yesterday. So it's whether or not we can hold it a lower high and pressure down, or whether we sort of chop around this area for a push up to 402.70. Okay, we'll wait and see how that goes. You never know with these markets, with the especially your cryptos. But I think longer term, it's under pressure. This is what bulls are hoping that it's going to stick. You know, you've got testing down here, higher low. They're waiting to see if this level can stick. Potentially a level through here is going to provide a higher low. We're going to ramp up and through. But if we're going to provide a higher low here, I would expect some sort of flush down, squeeze out some buyers before it starts building again and ramps up. Okay, but either way, there's no reason why it can't just roll over from here, this little minor double top through here, and roll over, take out that level, keep going south. Okay, Ethereum is a lot better. This was that same time about when we were doing the macro morning report. Up here, you got that pop, come back down into the lows, which you got through here, that held, and we've got a higher low that you could be working longs off before we ramped up, you know, even in through here, prime little area, popped up, held a higher low and extended on those gains. So that's kind of the price action you want to see off the MAs, ramps up and through. It wasn't content to stop around 26.09. It was wanting to press a bit higher, which it did react down off that 26.70. So I'll be looking for more of this action today. Maybe we ramp down. And don't forget, they're going to be reactive to FOMC and any index market action. So indices in the US are strong. There's a case to be said they're overextended, like I was saying, which would mean that potentially these cryptocurrencies are getting to get a bit heavier down the track as well. All right, that's all I want to say. Thanks very much for joining me. It'd be great if you could leave us a like, go to the YouTube channel, take a look around, even jump onto our to my website, www.tradethestructure.com. Have a look around. There's some free information on there. Sign up for free. Discord channel, we'll jump in there, and there'll be more action to come on that Discord channel. We're going to start making a few changes in there, change things around a bit, so it could be sort of a one-stop shop. You can jump on. As long as you've got a subscription, there'll be some material that's free. There'll be some material where you've got to have a subscription. Content where you're asking me questions about charts and bits and pieces. What do you think of this? What do you think of that? Okay, so there'll be a few changes to be made to that. Hopefully in the coming days, I'll just play around with that. But anyway, that'd be great if you can leave us a like on the YouTube channel, help us build the community, and then I'll speak to you tomorrow. Stay safe, guys. Enjoy.